Welcome everyone. If you are having a happy Wednesday, get started in a minute or two. Let everybody get in. Welcome. If you just got in, again, give us another minute or two to make sure everyone gets in, and we'll get started about right on time because we got a lot to cover. Seems like a lively subject. So whether you're watching live right now or watching it recorded, this is a new thing that we're doing now. I got convinced that I should do more of the live, timely updates, not just the kind of educational, informational webinars, even though they're good. And so this is the first of those where we're going to try to hit those topics timely that are on people's minds. And so whether you're watching it live through our webinar jam or after we posted it to YouTube, welcome. We appreciate you turning in. I hope that the information that we're about to deliver to you is going to help you understand some things, make better decisions. And of course, as we go through this, feel free to ask questions as we go. Sometimes I like to just hit them in stride. It makes it, I think, a little bit more interesting if someone thinks of a good question or idea that may not be in the presentation. And since I put all these together kind of from scratch and they're all individualized, I don't always know, what you know, right? And it may not be translating perfectly through. I also put a file handout for you. We'll hit into it. I very much in the slideshow in the presentation have a very summarized history of the tariffs, and the doc I put into there is a very detailed history of the tariffs. So obviously summarized using the deep research from the Chat GPT 4.0 with my guidance in cleaning up. So hopefully it's really good information, very well referenced, footnoted, etc. So you'll be able to see it as well. So we'll go ahead and get started here. Let me share my screen. Do the entire screen here. Okay. So hopefully you can see. So here we go, digging in. If you can't hear, Dylan, did we post in the chat telling them to, how to get the sound on? Yeah. So let's do that because I saw one of our attendees leave and then come back, and I'm wondering if it is a sound problem. Okay. So welcome again. This is hopefully a very timely update, interactive. I don't do cookie cutter stuff, so I made this for you in the last day and a half. So everything in here is pretty much from scratch and totally up to date here, as you can see. Our president here talking from a news conference, and I try to put some funny things in there, some memes and whatever. I always like this bottom line up front. You can see over there, give it to me now. So what am I talking about? So I'm going to dig into the data. We're going to look at a lot of the boring stuff of like, what is the data actually telling us about what is happening? And really the crux of that is possible recession. It's really pointing to that. It's pointing to recession, unfortunately. And so there's your bluff on that. I'm going to give you some historical context of how we've implemented tariffs historically, and how they really worked. And so they have accomplished some of their goals in protected industries. Protectionism is kind of one of the main things that they do well. In our infancy, they helped us raise the majority of our revenue, but generally, no, they don't work for what the big intended purposes are, or the negative side of them significantly overwhelms the positive, at least on average for the vast majority of people. There's certain industries that can benefit well. So we're going to look at where we are, and get into some practical applications, kind of more I call the fun stuff of looking at, who pays the tariffs, give you a couple examples, etc. And then what's the takeaway? The timely part of this is the takeaway is that we're self-imposing a bunch of bad things on ourselves that's bad for business, right? It's going to probably be bad for our economy, the global economy, and there are multiple outcomes from it, but none of them are too rosy, and we're going to look at those. So keeping on moving on. I can get it to move on. Okay, so let's do poll number 1. So go ahead, throw it up there. Everybody answer. This is your personal opinion. Do you believe that the proposed tariffs will, 1, strengthen the U.S. and create manufacturing jobs? 2, not do much either way. It's just a negotiating tactic. 3, it's mainly a negotiating tactic, but will probably have a little bit of negative outcome. They'll be enacted and cause considerable economic damage to the U.S. and other countries, or you're really negative, they'll be enacted and cause serious global recession or possible depression. So let's see what your answers are. Give it another few seconds. Answer. Come on. All right, shut it down. So it looks like nobody's really positive about it. It's either, I don't think it's split, kind of a third between it's not going to do much either way. It's a negotiating tactic. 2, it's going to slightly have negative outcomes, or be enacted and cause some damage, but not a huge global recession. Okay, so it's these 3, 2 through 4, kind of split on your all's opinions. So thanks for participating. So now we're going to transition to kind of the technical analysis side of things. So this is not always the most fun stuff to go through, but bear with me. I'm going to be a little bit lighter than an economist. I've been to a couple of those lately, actually, one just yesterday evening. But it's still good to understand that, we're not just talking opinions here. There's actually some data behind everything. So first of all, just to really understand where the U.S. trade imbalance is, because I don't think everybody's informed. They're just like, we're running deficits, how has that changed? So all the way up here from kind of the end of the Clinton era, right? You can see not really much of a imbalance to the negative. And then as we go through, Bush, so we start that downward trend to more down. And then you kind of have the Obama administration that goes sideways, and then the Trump administration first that goes down all the way to about there. And then, the Biden administration kind of going sideways. And now you're taking this deep dive. Now, again, there's lots of things going on, so we don't know that this is like really where it sunk down to, or that this is just a gyration. But we've been on that trend to kind of down. I don't necessarily think that this is like, a Republican or a Democratic or somebody's fault. I think this is just us as Americans. We like buying cheap stuff, especially from Asia, and we buy a lot of it. And we continue to buy more and more and more. And while they do buy from us, we just buy a lot more of their stuff, right? So if we want to particularly kind of pick on China here, you can see, our exports to China have grown pretty good, but you can see how much we buy from them has just increased even more. And so that trade balance, is that negative 295 billion that we're at. But I mean, we actually are positive on the services. So we sell them, $30-some billion worth of services per year as well. So again, I don't particularly think this is good or bad. It's not going to make our country better or worse because we have this trade imbalance. I think it actually helps a lot of our people out to have, especially the lower middle class and the bottom quartile of people, like socioeconomically. They have a higher standard of living because they have access to these lower cost products and so that they may not have access to otherwise. And so when we start slapping on a lot of these things, and it's very unpredictable, there's a lot of uncertainty of like what's going to happen next. I think there were a lot of people saying, hey, Trump is just threatening this stuff, and then he's going to use it as a negotiating tactic to just get us a better deal. But no, he just slammed everything on everyone. And you could see how much the economic uncertainty went up. And so looking at this over the whole last 20 years, I mean, we're at almost like twice the economic uncertainty, or, kind of scared than people were in 2008, 2009. It's kind of outrageous how high it is. You can see the pandemic was very scary as well too, and this is even beating that. So, that's what it says: this lack of policy clarity, the markets, people, businesses, institutional investors. They hate uncertainty more than they just hate knowing the negative thing is coming or here or what so. And so this uncertainty is a very bad thing. So even if we wanted to do some of these things, it should be better, well thought out, telegraphed, etc., so that businesses can invest. People aren't scared. You don't end up having a bunch of collateral damage, which is occurring. You can see consumer sentiment, how people feel about things. It's kind of three different readings here, but you can kind of look at it historically over the last 45 years. And this is the lowest it's pretty much ever been since 1980. Okay. So kind of the end of that long recession leading to stagflation when Reagan took over. And people started to get more positive again. But a lot of free trade stuff actually drove a lot of these things to happen, which is ironic. And so you can kind of see super low sentiment. Again, people are more pessimistic about what's happening in the economy now, and business leaders, et cetera, than they were in the financial crisis. So that's pretty wild in its own right. This puts together a lot of the leading economic indicators. And so it's putting them together to give you like how low does it go kind of on the average of putting those leading economic indicators. And you can see over the last 55 years, pretty much whenever they dip down, you had a recession. That's what those gray lines are right there, are recessions. Okay. And you could see how big this dip is. It's almost as big as the pandemic and the tech bubble, the 90s recession, and even the recession in the 70s and stagflation. These were deeper. The financial crisis was deeper, but this is pretty big already. And so people are pretty negative. This has been a pretty good predictor of recessions. It's not the end all be all. I mean, we could flip right back up and not have a recession. We actually just had an occurrence where we had an inverted yield curve, which is where short-term rates are higher than long-term rates. And historically, that's almost been 100% predictor of recession, and it did not happen that time. And so that's very interesting that that one failed after it worked for decades and decades and decades. And so here's another one that you're looking at. So it's not the end-all be-all, but it's a pretty good predictor, okay? Because you probably hear some people say, I think we're already in recession already. I don't know that we're that far, but it really looks like we're going there. Economic activity indices. So this is like looking at manufacturing and non-manufacturing. So like services and what so, but anything below 50 means that it's contracting, in terms of what they're buying, producing, et cetera. And so you can see manufacturing's already in contraction of what it's pointing to. When you look at GDP, you're going to have investment, plus you're going to have your trade, like we were talking about with the imports and exports. You're going to have your consumer spending, you're going to have your government spending. Obviously, the government's trying to cut back all kinds of stuff, so that's going negative. And then number two, just I think it was a month and some ago, you could see as soon as the election was known, you saw a lot of business and institutional investment stop. Like it's going negative now. The only thing holding the economy up is consumer spending. And credit card debt and what so is, pushing up higher than where we were pre-financial crisis, even though incomes have gone up. So it may be sustainable, but still, the consumer may be almost done as well too. So let's see here. Remember, if you join later, I said, feel free to punch up your questions as we go if you have any. Be happy to try to answer as many as I can as we go if you think of them. So let's get back here. Consumer inflation expectations. This is higher than I thought it would be. And so you could see, what do in this poll, consumers think inflation will be over the next year and 5 years. Over the next year, 6.7 from where we are now at 2%. Like that's a huge jump. So the average consumer is expecting prices to go up pretty good and then not come back down. 5 years from now, be almost double from where we are now. So that's pretty pessimistic that people are thinking that way. You can kind of see the dollar, when we look at it the last couple of years, been kind of up and down, up and down, up and down. Lately, before the tariff stuff, you could see we were going up mainly because the Fed was raising rates to get control of inflation. And now with all the tariff stuff, you see it just fall off. We lost about, upwards almost 10% since the beginning of the year. And so the dollar is weakening. And so we'll see what happens with that. So now we're going to look at history. So again, throw your questions if you got them. But looking at history, so what's the real history? Because I think unfortunately, a lot of the news networks are not very newsy anymore in their opinion, and a lot of people like to get the opinion news from the side that they like to hear it from, which is absolutely normal. That is a very known bias that humans have. We have confirmation bias. We want people to confirm what we already believe. So that's why these things do so well. Remember that about yourself and look at the other side of things, or do some of your own research. Like I said, like how I generated this, it took a little bit of finagling, but just kind of using ChatGPT. And we have the Teams version, which is the paid version. But you can see, I'm giving you the kind of short version right here. But you can see the long history we've had from tariffs, pretty much since the beginning. That's how we funded the federal government in the beginning, was straight up from tariffs, and all these different tariffs that we've implemented over time. I gave that to you as a handout so you can kind of see. I'm going to skip through and we'll go back to that slide. But really in the beginning, we enacted it to pay for the government. We enacted it to pay for expanded government and wars, okay, a little bit protectionist. Then we started to get a lot more protectionist because we wanted our industries to develop. And Europe at that time really had the industrial powerhouse. So we were trying to protect some of our industries to develop and whatsoever, but it got pretty high. I mean, you can see the name of some of these, the Tariff of Abominations was nicknamed because, and it a lot of these really was the North provoking the South because they made their money off of a lot of the manufacturing and production, and the South made theirs off of agriculture and needed to trade with Europe. So a lot of this caused, it was a big cause of the Civil War as well, beyond, slavery, etc., states' rights, blah, blah, blah. But again, that's not what we're talking about. Again, look at this, the names of these, Black Tariff, when you start to look at what happened, how high they went up to, and what were the ramifications of them. And, this was the ingrained thing. It is tough sometimes to switch from what you've always been doing to something else. And there were multiple times where they tried to lower the tariffs because it wasn't the greatest for the economy and growing, et cetera. But then they would always have problems where they run out of money federally and there was no other real source of income. And so they had to raise them back up, or there'd be small things where they wanted to protect a certain industry. And of course, back then there was a lot more pork and people, kind of lobbying to get stuff for their people, or, someone that knew somebody that was a powerful senator or influential senator. And really the main one people have mainly, look at all these. The main one people have mainly heard of, though, is the Smoot-Hawley. But you saw how many more there were before that. And this really was the kind of nail in the coffin of tariffs because we enacted it to try to protect things, to try to bring our industries out of where we were in a pretty tough recession. And really, everybody just retaliated and world trade collapsed. And it really, they say, deep in the depression, but it was one of the main causes of turning a bad recession into a depression. And so, whenever you're hearing a lot of, in my opinion, fake news history of people saying that getting rid of the tariffs caused the depression, that's absolutely the opposite of what happened historically. And you can see we kind of learned our lesson here. And Hoover was not as bad as a president as people thought. I mean, it's not bad at all. And a lot of what FDR did, was, I like FDR, but it was smoke and mirrors. A lot of the programs that he made, it was really World War II that bailed us out of getting out of the depression. And then, of course, we realized a lot of that, and especially being such a manufacturing powerhouse and just economic producer, it behooved us to have free trade. And so over time, especially since we were paying for everybody to be rebuilt with the Marshall Plan and everything like that, we enforced free trade kind of on the rest of the world. And so feel free to look through here. And that went all the way up until we started hitting 2000s. We had a couple tariffs on, small things like steel and Chinese tires until we had where Trump's first presidency, when we really start hitting in some tariffs, and then continuing on getting the ability of using the Section 232 for national security to make it a lot easier, to where we are now. Okay, so that gives you the history. Again, kind of the short version here, summarized version. I wanted to give you a little guided tour through that document without spending too much time on it, but there's a lot of data, there's a lot of history, and really in the early 1900s, we enacted the income tax because tariffs were not going to be able to support our government, and that's pretty much where we've been ever since. And that may be inadequate now as more things change. We're going to talk about later, more to wealth than income as being the main, source of I can't say wealth is the main source of wealth. It's like accumulated wealth is becoming more powerful, like what gets earned off of it, or that it can actually own the means of production, that it's producing more income than labor is able to produce in like earned income from labor. Okay, so let's look. I think we had a couple questions. It says, you said that consumer spending was a major component of what is keeping our economy strong. If inflation picks up, will consumers be able to continue that spending? And so, that's a good question. So again, all of these, I think when you ask about like what's going to happen based on if something else happens to someone like me, it is part educated guess, so using what I know and all the information and the data, but part of it's just a guess. Okay. And so absolutely if you look at like a lot of the money that got injected into the economy from all the legislation and stimulus that came out of the pandemic, most of that money's been spent, and then even more. You see a lot of the middle class, probably the upper middle class and lower, spent all that money, and they've run up their consumer debt as well too. A lot of wealthier people, I'm going to hit this kind of at the end of like where wealth inequality is now, they still have a lot of extra money. And so really where you're seeing the strongest consumer is older Americans and really wealthy Americans. The Americans at the top 10%, the top like 1% are spending like crazy. And so that's really what's holding up the consumer spending. And I think both of those groups of people, as long as there's not, for the older Americans, there's not a protracted market downturn, have the wherewithal to keep going. I don't know that the middle class and lower does, right? And that depends on interest rates. If inflation was to tick up and interest rates went up, things got more expensive because of the tariffs, and they had that consumer debt. They had the extra debt that's going to be at the higher interest rate because that's variable rate. Yeah, they're going to get knocked out. And then if you have negative GDP, maybe not negative, but really declining GDP contribution from the government because we're cutting it down, and businesses and stuff don't want to invest, yeah, we're probably going to hit a recession. We're overdue for one. It's just how severe does it have to be based on the things that we self-inflict on ourselves. And so, all right, second, we'll do one more question and then keep moving on. Do you think tariffs could put us in a depression? It's absolutely possible. It just depends on how bad it is, right? And so more than likely, if we enacted all of these things, so here's the Liberation Day, April 2nd, reciprocal tariffs, which really weren't reciprocal at all. We just looked at what our trade deficit was and then put tariffs on them, thinking that us just having a trade imbalance is bad, which we already talked about at the beginning, probably is not. Okay, it's not bad, but trying to just stop it by charging all these tariffs that they're probably going to come back on us for and messing up all of global trade, that's really bad. Okay, that is going to cause a lot of global destruction. We're all tied to each other now. So even if we push somebody else into recession first, if multiple of them go into recession and we're not trading with them, and our consumers can't necessarily handle the full extra prices. I'm going to do a poll where, ask about, could you afford to buy all the stuff you buy now from Amazon and, Temu or Shein or Walmart or half the stuff in the grocery store if it was 50 to 100% higher? I think you're going to tap out some people on that. But here you can kind of see and then depression really happens. When you see depressions get worse and worse and worse, is deflation. And right now, a lot of people say, "Oh, yay, deflation! Let's get the prices back down. They went up too far. I just finally got some raises in the last couple of years, made some progress, but all these prices went up. I'd like to see the prices go back down." If you really get in a deflationary cycle, that's the key cycle, then what ends up happening is that people wait to buy something because they think it's going to be cheaper in the future. And if you get a lot of people into that cycle of waiting, you could see consumer spending fall off of a cliff. And then once that happens, it's kind of a self-fulfilling prophecy. Then companies are like, oh crap, we got to cut expenses and stuff. Let's lay people off. Then all the workers are like, oh crap, they're laying us all off. I got to save my money. What if they lay me off next? And then they don't spend. And then that makes things worse, right? And so generally it'll work itself down to some kind of equilibrium. Then you start the recovery. And so the real question is, how bad is that, right? Okay, so we can see where this is right now, and of course, China is taking the maximum hit right now for actually standing up for itself. Everything else down to 10% and on a pause. Obviously, we have a few extra ones in there with the aluminum steel tariffs and some of the tariffs that were on before that. Mainly, those were on China. That are still there as well too. And so really, if things end up going to these high levels, I think right now, just with what we've done, even though he kind of paused and everything, and the economic uncertainty and the fact that there's definitely going to be tariffs, and China is one of our biggest trading partners. The risk of recession right now, probabilistically, I think went from 20% to 45%. And I saw estimates that when this was in effect, if they were all going to stay, that it was as high as 80%. It was pretty much going to happen, but with the pause and everything, we'll see if they can negotiate and keep that to more of a coin flip, but we'll see, right? Let's get back here and go forward. Okay, so give me 1 second here. All right, so I wanted to do a practical example because I've seen a lot of these on videos and TV shows where people don't know who's paying for the tariffs. And so really, consumers pay for tariffs, okay? One way or another. And, the company can swallow some of it, so let's say in this example, we look at a smartphone purchase. And so let's say it was $700 when they, pay for all the chips and the screen and the processor and the people to put it together, or machines that put it together. All comes out to about $700. They probably have put, part of the shipping into the cost of the product, even though there is a separate shipping charge. I think that usually ends up coming from a middleman. You got your sales tax on it. Of course, you guys probably live in different states, so it could be different for you. But in this instance, we are using 7%. Maybe you buy the warranty or not, but I made it apples to apples. Doesn't matter. So we say, the price of this smartphone is $830. Almost $832, right? So consumers pay, what the market will bear. Maybe it really only costs them $300 to make it, so they have a $400 profit into there. That's great, right? If we say, all right, we look at the tariffs, and really, if we say, the average tariff is going to be about 40%, okay? I do that because China is just so big in this stuff, and right now they're over 100%. And then you're going to have some cascading effects to where maybe labor costs more and stuff. So they're just going to say 50%. There's a 50% price increase here. Math is pretty easy on that, right? An extra $350 plus the sales tax is going to go on the total purchase price. And not only do you have that tariff there, but now your sales tax is going to be more on that. So now you're up to $1,200 and some dollars for the same phone. Okay, so China's not paying this. Vietnam's not going to pay this. Apple's not going to pay this. They may, if they find that the market won't bear 1206, they may swallow part of it and say, all right, we'll swallow $50 of it, but you're still looking at like $11.50. About $50 of their 400 margin, that's big. That is big. That's going to show up on bottom lines to investors. And Apple's been a darling of a producer. They're not going to swallow that very easy. Okay. So really, when it comes down to it, we're going to pay this, not some other country. Okay. And they don't buy near as much from us as we do from them. So really, the tariff for us is really a tax on people who spend more of their income on buying stuff. Okay. So that means it's very regressive, kind of like a national sales tax or a VAT or something like that. Okay. So people that have to spend more of what they make to live this is a higher tax on them. If you're rich and you have a bunch of money, yeah, you're going to pay it too, but it's like nothing to you. It's a drop in the bucket. You maybe only spend 5% of what you make on your interest and stuff to live. And so in that respect, you're not paying on most of your money the tariff. For most Americans that, they're buying stuff that's imported all the time, this is a bigger tax on you. So it's very ironic that they're passing a tax bill through Congress right now that's mainly going to impact saving taxes for people that make more than $400,000, and they're increasing taxes on the lower class through the tariffs. Okay. All right. Keep moving on. Throw your questions up if you got them. So poll question number 2. Let's throw it up there. Let's get it up there. Poll question number 2. What's your budget for this? I said, would you pay 50 to 100% more for many or most products that you buy on Amazon or Walmart, at the grocery store, Costco, etc.? Yes, absolutely, because I believe it will bring back higher paying jobs. Yes, I would try, but I don't know if I can afford it. Maybe, but I would just hold off, hoping that, this is just going to blow over in a few weeks or a month and they'll go back down, and then I'll hold up all my stuff and then buy. Absolutely, I can't afford it. I have to cut back. Or the last one is I would cut back and just boycott out of principle. I'm not going to buy the same stuff that I have. I mean, I know I personally almost did number 5 on how much they've raised Coke prices. Like, I'm not paying, $9 for a 12-pack. You're out of your mind, So anyways, let's end the poll. And it looks like it was primarily, nope, I can't afford it, to maybe hold off, hoping that the price would go back down. That's where all the answers fell out. That makes sense to me. We'll see. I know some people, hope that this happens, that it'll bring back higher paying jobs and things will be better. But it's just tough. You think about it already. I'm just talking to, one of the guys that works with us, and, his wife is from Philippines and they lived over there, and he was just telling me how inexpensive things were and how much he pays contractors to do all this work. And, man, it was really like 1/20th of what you pay here. And it's just wild that they can even afford to do that. So us doing things to make our lives more expensive is just kind of crazy in terms of how much more expensive things are for us than most other people and places in the world. So what does this mean for us? What are the risks and what's going to happen or possibly happen economically with stability? There's a global recession risk. It's real. And even if, you try to sell it that it's better for us, we're going to collect all this money. Well, what are we going to do with this money? Is it really going to make anybody's lives better? But if enough of them go into recession, they're going to pull us into recession. We are tied. If we go into recession, we're going to jerk a lot of the rest of the world into recession, kind of vice versa, right? So we're tied a lot more than we used to be, 20 or 30 or even 50 years ago. And so we're going to have trade reduction. And like we talked about before, all the NAFTA and the GATT and, all this free trade stuff that happened from like 1947 all the way up into the 1990s, that was a big variable that made a lot of our prosperity happen. And so to just say that now we're going to implement all this and make a bunch of prosperity goes against everything that is what actually happened to us, right? And so interest rate volatility, we don't really know what's going to happen with this, because basically if we get a lot more inflation, and I think there's a lot of inflation pressure. And so just, obviously with the cost of goods going up just from the tariffs, that's big. But again, that's not the end all be all, because it ends up being like a big up, but then it goes sideways, right? And then sometimes lowers over time. And so it's not something that we can't overcome or that wouldn't go away. But there's other things, that are pushing beyond that in terms of, this is going to be one of the biggest national debt increases in history, more than what we had to do to try to soften the blow for the financial crisis or for the pandemic. And mainly, when you look at that, it's going to be for tax cuts for the ultra wealthy. And so that's going to be inflationary as well. And then you look at, two things that have really kept costs down over time has been the globalization and the low labor. So if we don't have access to those products and we just make it all here, that's going to be a continued pressure of inflation. And then also our immigration policy, I think, is very inflationary because I don't know that all the Americans understand how much this very low, labor input to us is worth in terms of keeping the cost down, from hotels to taking care of landscaping and construction of homes and building and keeping up the roads and the infrastructure. If we lose that labor source, we're going to be in a world of hurt. And right now, it seems like we're just trying to get rid of anybody, and we're not making any extra legal ways for immigration. I think that's going to be one of the bigger inflationary problems that we're not addressing. And then when I say volatility is if that inflation comes, we're going to have to raise the rates to kind of fight it, right? If we cause a global recession, then you're going to see rates drop as a monetary stimulus to try to get us out of that recession depression. And so you really don't know what's going to happen here. And they could both happen, or you could end up at the end, like we'll talk about, like with stagflation again. I think you're going to see energy all over the place. Again, there's just so much uncertainty. That's the unfortunate thing about this is I can't tell you what's going to happen. I can just tell you it's going to go one way or the other. Right now, energy is coming down significantly, but that's mainly for demand purposes. And then market sentiment, like we said, one of the main things holding up the main economy that's fueling everybody, which is ours, is consumer spending. But if everybody gets scared and they don't want to spend anymore, they want to increase their savings, or they want to pay down their debt because they're worried about, what's going to happen in the future, then it's almost a self-fulfilling prophecy on the recession. So, poll question number 3. Could we see deflation again? What do you think? What do you think is possible in today's economic climate? So yes, I welcome the lowering prices. There's a lot of people's sentiment right now. Price went up too much. I want them to go down. Deflation would be awesome. Yes, and I think it could have bad consequences. So instead of thinking that it's good and they think it's going to go down, it's like, yes, but I think it's bad. Or no, I don't think there's any deflation coming. Or, I'll put that, I don't know. So let's see what everybody says. Give another second or so in case you're slow. All right, let's shut it down. So we got 66% in the no and 33% in the I don't know. So most people don't see deflation. I really hope you're right. Deflation historically has almost never been good. If we see it, it's bad. Okay, now if it happens in a few products, it'd be just a market adjustment where it's high and it's coming back down. But you see it across the board where you actually get like the negative inflation when we average everything together. That would be bad. Kind of like Ghostbusters, the first one, right? Don't cross the streams. All right, so let's keep going here. Okay, so some conclusions here. So inflation seems to have settled, at least in the short term. But like I said, we're doing a lot of things right now that are pushing inflation. So we're going to see if it comes back. I think it is very duality that if everything ends up okay, then you're going to see inflation come back. If everything starts to fall apart and we start to have a recession, then you're not going to have to worry about inflation that much because the recession is going to knock that inflation out and hopefully it doesn't go the opposite way. So what are the policy pressures? Obviously the tariffs, which is the main thing that we're talking about here. Fiscal policy, so tax cuts, stimulating the economy further. Again, I don't know that that's the case, because if the tax cuts are mainly for wealthy people, they don't tend to spend that extra money much more than they already were. They tend to save it or invest it. You stimulate the economy a whole lot more from fiscal stimulus to the middle class and lower, because they tend to spend it when you give it to them, and that's what makes business good. People buy stuff, right? Labor shortages, so immigration, I think is going to be it's already been a problem. It's been a huge problem. We do not have enough people to fill the positions that we need, even though it is a good market environment, and it's better now for businesses than it was. Worse for labor, but it's still, we don't have much capacity. And then of course multiplying the national debt, all of these things when you put them together could inflame inflation. But that is complicated calculus right there. We don't know exactly what's going to happen with it. So we got three possible outcomes. Inflation could rise. I mean, we could hit a 1970s or 80s type scenario where we hit into the teens and what's so on inflation and interest rates. You could have the opposite, massive global recession, which I think is, short-term wise, the worst, right? I think actually long-term wise, this one and this one would be worse, because in this we'd have a downturn, everything would reset, and then we go. And of course, if it was caused by some of these things, they might reverse at least a couple of them, and so which would make it not as long-term. Or nothing exciting, and you get stagflation, where you have just slow growth for a long period of time. You have medium inflation, maybe sticking around 6 to 8%. Minimal tariffs, but it's just nothing exciting's going on here. It's not a fun economy to be in, especially since it's just malaise for so long. So I think this is what you're looking at. One of these three. Hopefully not. Obviously another alternative is nothing bad happens, but when you're looking at all the data and everything that's going on, I don't think people are posturing, like on the tariffs. Then I do not think that a lot of good is going to come out of it. Okay, so here's the thing, the argument for doing the tariffs that I think most Americans would get behind. It's like, who wants to bring back manufacturing? Like, lots of people. Like, that sounds good, right? Who wants to work at a factory? Who wants the manufacturing job? Like, almost no one. It's kind of the same thing with immigration. It's like, well, let's get all these foreigners out of our country. Okay, who wants to go pick the oranges now? Who wants to go, pave the roads and build the roofs? Like, no one, right? So who's going to do this? Well, manufacturing may very well come back if we do this, but I don't think the jobs will. They're going to be done by robots and machines. And so, who is this going to benefit? This is going to benefit the super rich people that can afford to buy and own the machines to do that. Okay, so people in general are going to lose, because even if they're working low wages, all those people in Asia are going to lose their jobs. We're not going to get them over here, and then robots are going to take it all over and probably increase productivity significantly. But if you aren't already significantly wealthy, you are probably not going to benefit from that. Okay, so that's why I put here, what's the problem that people are really upset about, even if they don't know how to explain it? And I think there's a lot of people upset about where things are going, even though we've done a really good job over the last 40 years of tamping down poverty and what's so. It's just, we're fairness animals. We really are. Us and dogs and all kinds of animal kingdom things really care about what's fair and what's not. And you look at the last say 45 years here. And I try, again, I took some stuff from some of these places, but I try to make sure that their stuff's on here. So check them out. I appreciate you guys contributing to our presentation. And we'll hopefully some people that watch this go check it out. But you could see how much the income from the top 1% has gone up over the middle class, basically. Like 5 times more progress and more to the people that were already in the top 1% than the majority of the middle class of the United States, right? And so they're very close to cumulative inflation versus really making huge gains. It's not fair. right? So let's see. We got a question here. Let's see. It says, how do global trade disruptions influence your view on investing internationally? So it's an interesting concept because, generally what you want to do is, what Warren Buffett always said, you want to find good companies, you want to find them for a good price, and you want to invest for the long term, right? But you're going to have all of these things in the middle that are irrational, sometimes counterintuitive. So like right now, if you look at where the markets are, the S&P is down, like 8%, and international's up like 5%. But if tariffs hurt international, they hurt other countries more than the United States. Why wouldn't the United States be up more than the international, right? So that's pretty counterintuitive. And there could be a lot of explanations for that, from the fact that they just underperformed and been undervalued for a long time. And now, since we're kind of shooting ourselves in the foot with everything that we're doing, we're just having more of a correction because we are way more of ahead. But you don't know. And so it does not change my view. We put our eggs in different baskets for diversification purposes, to be able to buy low and sell high, and be able to diversify some risk. Investing in international versus like 50 years ago isn't quite as good, because it used to be, England or Japan could be just slamming doing awesome while we're in recession. So that's kind of a good thing, so we want, the whole purpose of putting eggs in different baskets is to have things that are doing different things at different times, right? And so it's good to have that, we call it non-correlation, right? But like I had mentioned earlier, we're all tied together a lot more now. So, if we go into recession, it's very highly likely that we're going to cause Europe and Japan to hit a recession as well, right? If it's significant. And so in that respect, it's not as good as it was, but I absolutely believe it's still good to invest. And, the last 10 or 15 years, we've just been crushing it. The United States has been the undisputed equity winning asset class. But the 10 years before that, it was not that, right? It was international beat quite handily over that time, especially tech stocks and what so. So continuing on, with our fairness thing here, and really understanding the state of wealth and income in the United States. I mean, look at this. This is the roaring 20s back here. This is when, if you know anything about Teddy Roosevelt, and so he had to go trust bust, the big trusts that were putting together huge corporations together and accumulating mass amounts of wealth, and the bottom was getting left behind. And that is what typified this. We have more income and wealth inequality, by about 30% more now than we did back then. And we don't think this is a problem. Okay. This is where I think a lot of people think the system is rigged. They don't want the same people in charge, which is, how you got Bernie Sanders to come up, and Trump, and obviously the Trump side versus the Bernie Sanders side of the whiplash won out. And unfortunately, I don't think that he's going to make any correction to this. I think it's only going to intensify, unfortunately. And so here you can kind of see, distribution of income versus distribution of wealth, right? So the top 10% control 73% of everything. And they're taking over 50% of all the income. Okay. So the bottom 90% owns very little and doesn't make near as much. So you can't catch up either. Okay. There are some people that will change their stars and be able to move up to these percents. I'm not knocking that. But in terms of the probability of success from 1960 and today has gone down multiple times, like the probability that you could change your stars, right? Okay. And then beyond that, again, I'm not trying to hit this up too much, but it's important to just understand what the reality is. If we look at who actually has the wealth, it's pretty much white people, significantly more, okay? And generally white men, about 2 times more than women as well too. So, I mean, people need to understand these things. The game is not equal. And right now, I think you're seeing a lot of whiplash to the people that have it, really doubling down to protect it and keep it. So a couple questions to hit into from me to you to think about. It says we can't afford higher taxes, right? And we already pay more than most of the world. If we look at that, let's look at ourselves first. So like I mentioned, around early 1900s, 1913, we introduced the federal income tax because the tariffs weren't going to be enough, and it wasn't reliable, and it was hurting us in ways that we need more money, especially when World War I hit in and then World War II. And you could see how high our taxes were for the top. For the lowest, it has not been that much, right? The average tax rate is been down here, pretty low. This is just the highest on people, say up here where it was like 90% back then in the 1930s and 40s that made $1 million a year, right? And you could see it stayed up there for a long time, really until Reagan cut it down. And that's where we get the trickle down theory. And you can see ever since there, we lowered it, it came back up, and then we kind of been gyrating, but then keeping it pretty low versus historical. And the lowest rate has stayed pretty even though it is higher than it was originally envisioned to be. You can see back here, it's like, on the low, they just really didn't just expect the lower middle class and whatso to pay hardly at all. Okay. And so continuing to look at this, looking at it versus corporate. So corporate taxes went up, stayed up, came down even more. And for most of its history, was pretty high up here. They paid their fair share, and now they're down to 30-40% lower than what we pay individually. And we're talking about cutting that even more to 15%. That's part of that legislation. Then you could say, this is one of the things I was talking about before, with wealth inequality. It's like, all right, well, how do you correct that? In the United States, we're not super social. We're not just going to take people's money or property away. So they say, all right, when you die, you got to give a percentage of it back if you're wealthy, super wealthy, right? And you could see it used to be, if you had more than $1 million or so, there was a 50% tax on everything above that. And generally you could double it if you were married, right? Now we got that all the way up to 14 million a person as a couple. So we're almost up to 30 million and the rate's only 40%. So this is like one of the things that would help, redistribute to where it doesn't accumulate in the top. Okay. But again, you could just see what's happening is we're eroding away the tax base, and we're spending more, and it is not a formula that is sustainable. And then we look at, to say, oh, well, we pay the highest. Like, no, we don't. We're almost in the lowest. If you look at, it's debatable on some of these, but developed country. I mean, we're down here with Ireland, Chile, and Mexico, but most of the countries that we know and admire for having very good societies, standard of living, security, they've got the happiest people, generally the best healthcare. We're a good 40% lower than where they are. So not even getting to the average. So absolutely, even we compare against ourselves historically, we compare against other countries, a lot of whom we think are living better than us. We're not saying that they're better than us, they're living better than us. There's a lot of room, there's a lot of gap there. And so, it's like we can't tax the rich, right? It would crash the stock markets, and, growth wouldn't be there, and they wouldn't put all these money in their companies. And if you really look at what's going on, you can see how much the money supply has increased over the last 40 years. And so generally, when you have higher velocity, it means that's this red line here. When you have higher velocity, and you could see what was happening in the 90s, is money was getting spent and reinvested and, building new things. Now, not so much. They're investing it and putting it in. I mean, who do you think owns all of our debt? It's generally rich people in our own country. It's not China. It's not that. I mean, we own 80-some% of our own debt, and it's a bunch of the wealthier people, and that money isn't doing a lot productively. So absolutely, we could tax it. Absolutely, we could change things. And so, my real thing to leave to you all is the real divide is not left versus right. It's not political. It shouldn't be racial or any of the divisions that are masking what the fundamental economic reality is that the top 1% control the majority of all the wealth. They pretty much control the political parties between themselves, their super PACs, and the corporations. And then they divide the lower 99%. So we're distracted by all that they're doing. I mean, look right now, we're about to tear each other to pieces to give tax cuts to the super rich and put taxes on the rest of each other through tariffs because we hate outsiders. It's absolutely crazy. They're winning, right? I got a couple disclosures here for a lot of the charts and stuff that we used. Check us out on the website. If you do have any questions, shoot them through. I'll see if I can answer one or two before we jump off here. We got tons of reviews on here. I know I told Dylan to put the offers on here. You can have a complimentary consultation with us to see all these different things that we do for our clients. We believe in people. We really believe in people before profit. We do business services. We do cash management. We just finished up doing most of our clients do their tax preparation through us. And we have all of these cool things that make us different from just about every other financial advisor or advisory firm that you can find out there. We're happy to see if we're a good fit for you. And if not, we can refer you to someone we know lots of our peers through Napa that run their businesses a little bit different and can help you find somebody that can help you be more financially successful. This is our team. And see that QR code right there if you'd like to schedule a complimentary appointment. If there's any last questions, I will answer them. If not, we're going to finish actually almost for once ahead of time. So let's see. All right, I'll give you another second or so to see if anybody wants to get a last question in. Otherwise, we very much appreciate you joining us today, spending a little bit of your time with us. Again, I don't try to be like too progressive or anything. I just want people to really understand, why are we so mad at each other and what's the repercussions of this? And I absolutely love our country and think that the American dream of being able to work hard and move up and be an entrepreneur and create something out of nothing is awesome. And so we're not against that, but definitely we've probably gone too far in the laissez-faire, and we actually might be more successful leaning the other way towards each other and not fighting or embracing increased income and wealth inequality. So again, let us know if you have questions. If you're watching this on the replay, you can still ask questions. We get them, and then I'll answer them usually to you individually as long as I don't get crazy bombarded. It hasn't happened yet, but if you got the questions, send them to me. Happy to help. Hope you have a wonderful rest of the week. Happy spring, and hopefully we'll see you on one of our next webinars. See you then. Bye-bye.